As of September 2025, MicroStrategy holds close to 640,000 BTC at roughly $110,000 per coin. That equates to a Bitcoin NAV of about $75 billion. But if Bitcoin were to suffer a greater than 80% drawdown, not unprecedented, and NAV shrinks to just $15 billion. Against that, MSTR's annual interest and dividend obligations total about $614 million. Even under an extreme drawdown scenario, and assuming no additional BTC purchases, asset coverage would still exceed 20 times. Until the company fully equitizes its convertibles, these bonds remain a long-term liability that must be considered in the worst case. The key risk is if a convertible matures while MSTR's share price is below the conversion price. The earliest maturity is March 2028, a little over 2 years away. Even in a worst-case scenario where NAV shrinks to $15 billion, there should still be enough cushion to refinance or repay the $1 billion coming due. More likely, the company will equitize this debt before maturity. Of course, assets and liabilities are moving targets, so we must continue monitoring how they shift over time. But based on the information available today, MSTR appears solid enough to withstand an 80% Bitcoin drawdown. Here is a snapshot from MSTR's Q2 earnings webinar recording.
I think that our structure is smooth, and we wouldn't miss a single dividend payment on an 80% drawdown. On a 90% to 95% drawdown, in theory, you might suspend something for a little bit of time, but you would eventually get back current on it. So, so I think in terms of robustness, it's pretty robust.